Well, first of all, we're nowhere near capitulation. I think we're still in denial. Remember, this entire bull market was about the Fed, and the Fed finally pricked its own bubble in December, and there's a lot more air that's going to come out. The market is going much, much lower until the Federal Reserve comes clean, admits that it's not raising interest rates anymore. In fact, I think they're going to have to launch QE4 to save this market, and that is exactly what they're going to do. In the meantime, the Great Recession, which was interrupted by the Fed, is about to resume unless the Fed comes back. But of course, ultimately, we're going to die of the Fed's cure, which is actually worse than the disease. But yes, this might be a buying opportunity. It all depends on how quickly the Fed comes clean. But I still think they're going to wait a while. They're playing a game of chicken. But this economy is in lousy shape. You know, when you hear people say, oh, it's contained to manufacturing, it's just an industrial recession, it's just an industrial recession. Yeah, it's as contained as the mortgage problems were contained to subprime. Or if you remember when the NASDAQ bubble burst, by 2001, the S&P and the Dow still hadn't rolled over, contained to tech. It wasn't contained then, and it's not contained now. People are still in denial. These are enormous problems, both in the markets and the economy. The Fed reaped the wind or sowed the wind, and now we're all reaping the whirlwind. This bubble is bigger than those previous two bubbles combined. And even though interest rates are still low, they're not low enough. It's like when you get a big heroin habit and you take back the dosage, it's not enough.
Why isn't gold bouncing more, Peter? Why isn't gold bouncing more? Silver is a mess, too. I would think that those are the plays that you like, and that there is no fair trade here at the moment.
Peter, for the same reason that the dollar is still rising. People are still in denial about the real extent of the problem. People still believe in this phony U.S. recovery, like your other guests. You keep talking about the low unemployment rate. These are all lagging indicators. And the only reason the unemployment rate is down is because so many people have left the labor force or have settled for low-paying part-time jobs. But look, companies don't lay people off because they anticipate a recession. The layoffs start when employers are surprised by a recession they didn't anticipate.
And we can
if
say
you look
right
at
now,
all the economic data.
Yeah, it doesn't look like we're seeing capitulation just yet, because the stock market has been at least in the green earlier today at one point. Andy Brenner, Peter Schiff, thank you.
Joining me now from Westport, Connecticut, CEO and Chief Global Strategist for Euro Pacific Capital, Peter Schiff. Peter, it seems to me rather disingenuous to blame what's going on in the U.S. markets right now, the big drop, the terrible start to 2016, on China's problems in their markets and Kim Jong-un testing a hydrogen bomb. We've got plenty of problems here at home of our own.
Well, absolutely. In fact, if anything, the problems in the overseas markets are emanating from the United States. I mean, we're the source of the global instability. It's the Fed. Now, I said on your program many times that if the Fed made the mistake of pricking its own bubble and actually raised interest rates in 2015, which is what they did in the waning weeks of December, that the stock market was going to drop like a stone. And that's exactly what's happening, because the air is coming out of this bubble, and there's a lot of air in there. This is the biggest bubble the Fed has ever inflated. And many people are trying to pretend that there's no problem, or they're trying to say, you know, it's contained to China, or the problems in the economy are contained to manufacturing, you know, everything else is okay. This is just what they said when the mortgage bubble burst. They said it was contained to subprime. Or when the NASDAQ bubble burst, they said it was contained to tech. It's never contained, but they never run out of excuses.
So they went ahead and they raised rates anyway. And now what has happened since? Well, exactly what I said was going to happen. The air is already coming out of the bubble because the Fed pricked it. The U.S. stock market is now off to its worst January in the history of the stock market. We now have many of the indexes like the S&P and the Dow in correction mode, down over 10%. The NASDAQ, again, down over 10% just since the Fed hiked rates. But you have other measures like the Russell 2000 already down better than 20%. The Dow Transports, which is a smaller average but is very economically sensitive, that index is getting close to down 30%, solidly in bear market territory. What's happening with the economy? Well, the Atlanta Fed already has its estimate for fourth quarter GDP from last year at just 0.8. And I think that estimate could be too optimistic. I think it's possible that the fourth quarter GDP numbers, by the time they revise them, is going to end up being negative. But even if the last quarter of 2015 isn't negative, I believe the first quarter of 2016 will be negative. So the recession either began late last year or early this year, but I believe we're already in a recession and we're in bear markets in stocks. Now, what is the Fed going to do?